Let's talk about how mortgage rates actually go down, or what happens when the Fed cuts rates. There's a lot of misunderstanding and misconception around this topic. First off, when the Fed cuts rates, they're not cutting mortgage rates. They are cutting the Fed funds rate. That is not mortgages. So there's one mortgage, one type of mortgage, I should say, that it is tied to directly, which are your HELOCs. So when the Fed cuts rates, for example, they just cut, last month in October, they just cut another 0.25%. The all HELOCs that are tied to prime rate went down 0.25% as well. So prime rate in October dropped down to 7%. It was 7.25, dropped down to 7. So anyone who has an existing HELOC right now, their HELOC will drop 0.25% if it's based on prime rate. So that's great. The problem is most customers, they hear, oh, the Fed cut rates 0.25%. They think mortgage rates dropped to 0.25%. Actually, the last couple of times that the Fed has cut rates, the day or the day after the Fed cut, rates go up. So, the Fed cuts in most cases are very much a sell the news event, where if you look at the CME watch tool, Polymarkets, these things that give you percentages of chance of what the Fed's going to do, it's already priced in. For example, for the entire month of October, it was pretty much at a 90 to 96% chance that the Fed was going to cut 25 basis points in October. And they did. So what happens is markets price this in. So mortgage rates for your 30-year fixed mortgage rates, typically, for the most part, they follow what the 10-year Treasury yield is doing. And when markets know rates are going to come down and there's going to be more liquidity and all of this, that's positive typically for the 10-year Treasury. So the 10-year Treasury will tick down. This happens well in advance of when the Fed cuts. So when, a lot of people like to say, oh, we're going to wait until the Fed cuts rates. Well, you're probably getting a worse deal if you wait until the Fed cuts rates, which I try to explain and educate. This is obviously one of the main reasons for our podcast, is to educate on mostly mortgage financial matters.